Are you grappling with high-interest loans? Perhaps you're considering ways to lower these rates. If that's the case, then you've found the right place. In recent news, refinancing high-interest loans has been a hot topic. The Business Insider, in an article published on August 4, 2021, shed light on this subject. The piece provided valuable tips and advice for individuals considering refinancing their student loans. It recommended seeking financial counseling before making a decision, and even offered a guide to the best student loan refinance companies. However, it's important to remember that these are the author's opinions and that the offers mentioned could change. Fast forward to September 2023, Business Insider reported that despite recent drops, mortgage interest rates were still high. The average interest rate for a 30-year fixed mortgage was a staggering 7.07%, while rates for 15-year mortgages averaged 6.35%. With the average monthly mortgage payment for a 30-year fixed mortgage currently at $2,823, it's no wonder that people are seeking to refinance. However, it's not all doom and gloom. The article went on to explain that mortgage rates are influenced by a myriad of factors such as inflation, the bond market, housing market conditions, and Federal Reserve policy. Interestingly, rates fell in 2020 due to the impact of the coronavirus crisis, reaching a low of 2.65% in January 2021. And the good news? Rates are expected to start dropping again towards the end of 2023. The article also highlighted how factors within your control that influence rates include credit score, down payment, and loan term. With higher credit scores resulting in lower rates, it's clear that maintaining a good credit score is crucial. Another interesting point is that mortgage rates in the 6% to 7% range are considered high, and rates could potentially reach 8% this year. So, what can you do to get the best rates? The article suggests getting quotes from multiple lenders, and remember, a good mortgage rate varies depending on your credit score and financial situation. You can also consider paying discount points at closing to lower the interest rate. In conclusion, while high-interest loans can be a burden, there are options available to lower these rates. By staying informed, seeking professional advice, and taking proactive steps like improving your credit score and shopping around for rates, you can take control of your financial future. So are you ready to take the first step towards refinancing your loans? We encourage you to do so. And don't forget to come back for more financial insights and tips like subscribe and turn on notifications. Thanks for watching.